What's going on, guys? Philip here from BlackBull Markets. Hope you're doing well. Welcome back to another video. And this one I want to talk to you guys about trading against the trend. This is a very difficult thing to do, so let's dive into the details of it, see the wrong ways and the right ways of trading against the trend. So make sure to stick all the way through to the end of the video to see what we'll be looking at. Also make sure to smash that like button, guys, to subscribe to the channel if you're interested in learning more about Forex and improving your current trading skills. So without further ado, let's dive into the video and see what we have. Now, guys, the first thing I want you guys to understand about counter trend trading is what we'll be calling it. It is a very low probability trade, okay? So you'll notice that you'll get stopped out a lot more. It's very difficult to catch the top and catch the bottoms of a trend. This is why we have to change a couple of things in our trading strategy that we'll talk to more about towards the end of the video. Okay, so let's have a quick look at what the differences are from a normal sort of trading setup with a trend and a counter trend trading. Now, as traders, generally speaking, we're always trading between two zones. So we've got our resistance zone and we've got our support zone. Okay, and the market generally obviously moves between these structures. Whether it breaks further higher, we'll have more resistance coming up. If we break to the low side, there's obviously support coming down as well. But generally speaking, we're trading between these two zones. Now, when we start to trade, we're starting to generally hop on board when the market's already started its reversal, when it's already in the trend. So this is an example of maybe this could be on a monthly term time frame. Or even daily term time frame, depending on what you do on your lower terms. You're going to drop down to your, let's say, daily term time frame, and you'll see that this is now in a downtrend, and we can start looking at positions, let's say, for example, like breaks and retests, right? So we can always see these kind of setups, and this is a trend trading setup. So quickly, way to identify whether we're in a downtrend or in any sort of trend. The first thing that I personally look for, what any general trader looks for, let's say we have our support, is we want to see this happen. Essentially what this is we have higher lows and higher highs, right? This is kind of what defines a trend to the upside, right? So we've got our lows that are increasing in their height, and we have highs that are going up higher and higher and higher, okay? Now, an example that is not a, let's say, a trend or a new trend in the market is this. So if we have a marker into the upside, okay, this is not an example of a trend reversal, because we have our high, we have our low, we have a higher high, which is nice, but now we have a lower low. Okay, so this market, generally speaking, this will start to look at consolidating, and that's kind of how we identify when the trends start to reverse. Okay, and that's why it's also a bit easier to get into trades, and where it's more likely to get into trades, because if the market's already kick-started its change in direction, once we've seen the market kickstart those higher highs and higher lows, generally speaking, the chance of this market going up, because we're building buying power every time the market reaches down into a support, it increases the buying power, and we'll tend to see the market going further higher. This is why these trades tend to be more probable, right? So let's have a quick look at potential ways where we can look for market reversals. Now remember, guys, this is a very, like I said in the start, it's a very low probability trade. So what we have to do essentially is increase our risk reward ratio. Okay, this is very, very important. Okay, we'll talk about that more. Just want to show you guys a quick example of a potential counter trend trade setup. Okay, so generally speaking, what we could have is, let's say we've now been moving inside of these two zones. The market's now coming down. Now remember, without looking at sort of, let's ignore this sort of structure over here. What we're seeing, if we go to our lower term time frames, guys, we're trading this leg. So if this is on the weekly term time frame, let's say we drop down now to our daily term, or let's say 4-hourly term time frame, this is what we'll be seeing, right? Something along the lines like that. That's generally what we'll be seeing in the market when we trade against that trend. Okay, if we go down to our lower term time frames, this is what we'll see, and obviously you guys can see it's very logical to trade in with that trend. But how do we know when this trend's going to reverse? When can we look for trend reversals? Now, looking at our higher term time frame, we know we're approaching a support, but we're not just going to take a position there, because the market is very likely, in my opinion, some people can take it. If you do hit that support, you're more than welcome to look to take buys. It's just a difficult place to look to put your stop losses. Okay, so personally for me, what I want to see is I want to see a confirmation around the support. So let's blow that up a bit more, right? So this is our support zone. Okay, The market is now coming down to the support zone. Okay, what I want to see is I want to see some sort of confirmation. You guys can see as the head and shoulders potentially playing out. We can look for anything along the lines of double bottoms or multiple bottoms or consolidation or anything along the lines of that is a very good indication that the market is going to turn around. Now, I know also a very popular thing to use inside or for trend reversal trades is a divergence setup. So you can either have a MACD or a stochastic. Generally speaking, for my MACD, I've got the setup so this is an indicator that I use for trend reversals. MACD and the setups I have are 5, 34, 5. Okay, that's the settings I have for that MACD. Now, what I look for is called divergence. So let's get rid of this and we'll quickly focus on. We'll talk about that risk reward ratio a little bit later on. I just want to show you guys what we can look for, how we can start to confirm that the market is going to turn around. Right. So we've got the two sort of setups. We've got our chart and we have our, let's call it our indicator, our volume indicator or MACD, or what I'll be using, or stochastics, whatever you guys want to be using. Okay. So we've got our zones. Now we've got our price obviously along here and time along here. Okay. Now the market is moving down towards this structure over here. Okay. And what we're starting to see is we're seeing obviously the market starting to decrease, or it's starting to create these little corrections in the market where it keeps pushing up. And what we want to see down here on our volume indicator is we want to see something that looks along the lines of this. Okay, and what this is, let me see if I can actually, let's draw this a bit better. I want to show you guys a bit of a bigger blown up version of this. Okay, so we've got the market coming down. Okay, and below the market we have our indicator. Okay, there's our support as well. Okay, and then we have obviously this indicator down here. So what I want to see in this indicator is this sort of structure. Okay, and what this is essentially is called a divergence, where we see the market itself is moving down, right? But the indicator is moving up. This is called a divergence. So what we're seeing here is a decrease in volume. It's a decrease, clearly it's a decrease in selling power. So this market's starting to turn to the upside. Generally speaking, we'll start to see little bumps going to the upside, crossing that 0 mark zone. If we have that, again, that setting I have is 5, 34, 5 as a system that I have. Okay, and that will start to show us that the buyers, or the sellers in this case, are starting to slow down and they're starting to turn away, and the buyers are starting to kick in. We can use this if we are following with a technical analysis, guys. Now remember, if there's no support here and I see a divergence, I'm not just going to go blindly take a buy position. Okay, I want my technicals first of all. I want to see my support and resistance zones. I want to see my price, my market structure play out, and then I'm going to go look at things like the stochastics or the MACD in this case, right? And then I'm going to start seeing, do we have a divergence that I could use for the turnaround points, and then I'll start looking at taking potential buys. Once I have this, once I can confirm it, what I'll be doing, I'll put an entry in, stop loss below any sort of lows that we have. Say for example, the market had a, obviously in this big consolidation zone, I'll put my lows below, my stop loss below these lows, and then I'll start looking for positions to the upside. Okay, now this is one way of confirming. Another way of confirming is if we have a look on the higher term time frames, we can see, let's say for example, a weekly close. Okay, so we can have our consolidation zone, our trading zone. Okay, market's moving and we're coming down to the support, for example. Let's say on the monthly term time frame, we can see the candles are starting to create things along the lines of we start to see the market create things like this. Now this shows rejection in the market. Generally speaking, obviously we have got the highs and the lows, so we could also have that divergence that we spoke about on the MACD or any sort of stochastic, whatever indicator you want to use, volume indicator you want to use, and these could all go hand in hand to create things. If you look at this structure as well, let's clear this quickly out. So if we have a look at what this structure really is as well, is we actually do have, if you guys can see it, the head and shoulders forming, okay? And the head and shoulders also could decide that the market is going to turn around, right? So those are the first things. That's how we start to pick out entries for trend reversals. Now let's have a look at trading these trend reversals. Right now, like I said in the start of the video, guys, they are very low probability trades, okay? So what we need to do is we need to increase that risk reward ratio. This is how we control whether we're going to be profitable at the end of the certain time period, or whether we're going to just be breaking even or burning out our accounts, slowly taking away little bites at a time. Okay, now one thing that we always need to look at is over a period of time, let's say 20 trades or 25, maybe 30 trades, what we need to see is how accurate we are in our trading. For example, I'm not a trend reversal trader, I'm just a normal swing trader. So I'm about 50% accurate, okay? So, and my risk reward ratio can be 2 to 1, but I like to play with a 3 to 1 risk reward ratio. So essentially what that means, every time I win, I make $3, and every time I lose $1, okay? Now if I'm right half of the time, let's say I take 10 trades, so 10 trades winners, and let's say 5 of them are winners, obviously I'm going to make 15. If 5 of them are losers, I'm going to lose 5, right? So at the end of the day, taking down my losses and my profits, I'm still up $10 in this case if I was trading dollar for dollar, okay? So that's how these risk reward ratios work. Now, guys, if you are a trend reversal trader, remember that accuracy is going to go down. So what this means is the lower your accuracy, so let's go accuracy with A, and we'll go risk reward ratio just with R, okay? The lower this goes, the higher this has to go, okay? So the lower accuracy goes, the higher our risk reward goes. Okay, so now generally speaking, trend reversal trading is very, very difficult, not just to pick them, but psychologically difficult, okay? They can really play with your psychology, because remember, when you are trading trend reversals, you are still trading in these zones, but you're trading, now when you're trend reversal trading, you have to trade from here all the way back up to here. Now this can be a monthly, or even longer term time frame. So you can literally sit in here for a month, maybe two months or so, depending on your time frame. But if you're, let's say, trading on the daily term time frame or 4-hourly term time frame, you can sit in anything between, a week or 2 weeks in your trade. Now, this looks very simple, but remember, when you are trading in a trend, you are trading all the ups and downs in the market, okay? Okay, and that's what you'll be trading. And these drops over here are the things you will be needing to be willing to survive before this market hits your take profit, okay? So this is very, very important, okay? That this is the difference between any sort of other trading. You have to be able to ride that entire wave regardless of what it looks like. You have to stick to your risk reward ratio, you have to stick to your trading plan, and regardless of what the market gives you, whether it be big pullbacks, big consolidations, the market reaches your take profit, there's our zone, whether the market's gonna, let's say we took a buy, you're gonna have to sit through consolidation, you might have to sit through some negative when the market plays around, you're gonna have to sit through these big pullbacks, you might sit through where the market just reaches your take profit target, it'll pull back, consolidate a bit, maybe drop even further, come back up again, and that's eventually you'll hit take profit target. But you have to be able to sit, like I said, through all this mess the entire time. And this is exactly why trend reversal trading is so difficult, right? Because this looks easy just explaining it this way, but if you really put yourself in the shoes of someone who trades like this, if you think about looking at the market, seeing, for example, one day you're so close to your take profit, and 2 days later you're sitting, giving back half your position, this can be really detrimental to your psychology. And this is why it's so important to just leave your risk reward ratio, or leave your take profit, leave your stop loss, and let the market play out. Because if you put your entry over here, your stop loss down here, once you get a little bit of profit, move your profit to break even, the market will stop you out and then continue further higher, right? This is not what we want, because if you do these sort of things with a low probability trade, you'll end up having small winners and normal losses, and we don't want that, because that means your winners are smaller than your losses, and because your accuracy is very low, you'll end up blowing the account or slowly biting into it until you fix, or until you are able to sit through these very, very difficult times, guys. So personally speaking, if I was to choose, I would prefer not to trade like this. This is why, you know, as a swing trader, or any, you know, yes, I still trade from zone to zone. As a swing trader, I still do trade from zone to zone, but I'm not trying to catch his bottoms. I'm waiting for confirmation, like I said, with those higher highs and higher lows, and I'll start looking for positions, because I might have a, you know, a break in a retest for the market to push further higher. I might not always trade back to the upside. I might look for internal support zones, because we might have something that looks, you know, like this over here. So there's a support zone slash consolidation zone. So I might only have to trade it back up to here instead of having to wait for the painstaking probability of this market going back up, right? So this is kind of why I prefer to do just a, you know, normal swing trading, where I do catch a swing, but I am waiting for confirmations instead of just trying to pick these tops and bottoms, which is extremely difficult. Trust me, I've been doing this for 6 years. But it does work. I just don't have the mental strength for it, so I like to do swing trading, and that's the reason why, guys. Now, if you did like the video, definitely give us a like button, guys. Also subscribe to the channel, like I said before. If there's any recommendations you want us to do, any analysis you want us to check out, or anything you don't understand about trading, we're happy to help. Comment down below, guys, and we'll be happy to do videos on those topics. From us here at BlackBull Markets, guys, thanks so much for watching. Enjoy your week of trading. Stay tuned. Trade safe.